All right, live here. We had a really simple question, and I'm not particularly fervent or wedded to my particular position about it, but it'll be of help to those of you out there interested in investing. That right. Hello, Cappy. Hope you're doing well. I'd like your opinion on an investing strategy. First promoted in the 1980s by Harry Brown, who Turd-Flinging Monkey over on BitChute.com did not know about. And I was like, oh, you sad, pathetic excuse for an economist. Libertarian investor and two-time presidential candidate called the permanent portfolio. In this, you allocate your investment cash into 4 equal areas: stocks, long-term bonds, gold, and cash savings. The idea is that a few times a year, you check your portfolio to see how well your allocations are doing. And if one or more are underperforming, you reallocate the investments to get back to the 50% balance in each. The key, of course, is maintaining the balance. So you'll do more buying of the asset when it underperforms, unless one is doing stronger. I'm no investment wizard or economist by any stretch, but I like this idea. The only thing I would do differently is that instead of buying bonds, I don't like buying government debt, as it only encourages to keep doing it. I would replace it with land, specifically real estate investment trust. Very wise. I'd pick a good index fund through Vanguard for the stocks. The cash would be in savings and physical gold kept in a vault. In the midst of a serious debt elimination program that would take me about 4 years to complete. Do you think this idea has merit, or is it an old concept that has outlived its usefulness? No, I don't believe it is an old concept that has outlived its usefulness, because it gets you to invest. Here's your formula, follow the formula, do it. And if a formula that is followed and executed upon is better than a superior formula that's so complicated, nobody executes upon it. And basically the reason I like the permanent portfolio is it's diversified. Now, I've heard other variations of it. Harry Brown did a pretty good job of it and historically documented. And there's a link down below titled Investing in Equanimity, written by Alec de la Sueur. He was a sponsor of this podcast, and that's exactly what his book is about. And he retroactively analyzed how it performed very well. Its historical performance aside, I don't care. The main thing is that, is it simple enough for you to follow, and will you execute on it? You will? Good. Now, would I make some changes to the permanent portfolio? Yes, obviously I would. I would say you would add silver to your gold. I would call it precious metals. I like what you did with long-term bonds. I would switch to a real estate investment trust. I think that's a very good thing. If anything, I'd be adding more categories. Maybe have some government bonds, maybe some. But I do like your idea of diversifying out of it. So instead of a quad diversified investment portfolio, I probably have a sextet of categories, asset categories, which would be real estate investment trusts, some government bonds, gold, silver. We could just lump that into precious metals. And another thing I would add would be cryptocurrency. Not a lot. I wouldn't make it a full quarter or a fifth, but there should be some cryptocurrency invested in your portfolio. But yes, historically speaking, and if you read Eric's book, it's been proven. Now, that doesn't mean guaranteed of the future, but that has done very well. And the fact you're diversified against 4 main asset categories will actually do quite well. You know, some is up, some is down. You really got everything hedged against there in this simple portfolio. Like, there could be war. Well, I got gold. Who cares if the government goes down? Well, that money's now flooding into gold. I got land, and then I don't know, there's a financial crisis. Well, at least you got land. No, I think it still would hold to this day. I would broaden my horizons to include cryptocurrency and maybe silver as well. And I would even maybe diversify. Instead of stocks, I wouldn't just have U.S. stocks. I'd have a global supply of equities. That's what I would do. But yeah, it's simple diversification. You got split across 4 asset categories. I'd say 6, maybe 7. And you're doing good. So there you go. All right, any super chats? But I couldn't disagree more. Maybe Bitcoin. Maybe I take a bit. Bitcoin could go away. Cryptocurrency is not going away. It is not going. I have an idea. I think cryptocurrency is here to stay. But It may not be Bitcoin. You may be right there at Boca 18. But cryptocurrency is coming. It's already here. No one paid me enough to talk about that. All right. We'll see you guys later. Toodles.